Hey everyone, welcome to episode 4 of our Educational Investor Explainer. Today we're zooming right past the shiny silicon chips and focusing heavily on the critical physical layer beneath the entire artificial intelligence boom. We are talking about Vertiv Holdings Co., ticker symbol VRT. Look, with grid power constraints literally threatening to bottleneck the industry, these hyperscale data centers don't just run on code. They require an immense physical ecosystem of power and cooling to keep them from literally melting down. And that is exactly where Vertiv comes in. Here's our roadmap for today. We're going to hit the intro and business model, look at some qualitative trends, dive into the fundamental financials, map out valuation scenarios, cover key investment risks, and wrap it all up with a final investor checklist. Let's get into it. All right, Section 1, Intro and Business Model. So while Vertiv might sound like a brand new player to some retail investors, their DNA actually goes way back. I'm talking 1965, back when they were founded as Liebert Corporation. They were essentially early pioneers in precision computer room air conditioning. Fast forward to 2020, they hit the public markets through a SPAC merger, and the absolute cherry on top of their recent momentum, in March of 2026, Vertiv officially joined the S&P 500 index. It's really a classic story of a legacy industrial company finding itself right at the epicenter of a massive modern tech supercycle. Now, what do they actually do? Well, Vertiv's business model basically maps perfectly to the biggest bottlenecks in AI right now. They make their money by keeping data centers online and running smoothly. First up, critical power. We're talking uninterruptible power supplies, energy storage, and heavy-duty switchgear. Second is thermal management. As AI chips get exponentially denser, standard AC just doesn't cut it anymore. So Vertiv steps in with high-end liquid cooling and heat rejection systems. Third, they provide the integrated racks and enclosures to physically house these super dense clusters. And lastly, they have a massive global services division to manage and maintain all these complex projects all over the world. Just take a look at the sheer scale of these high-density data center corridors. When people talk about megawatt-scale AI, this is the physical reality we're talking about. I think investors are really starting to wake up to the fact that, hey, you can buy all the advanced GPUs you want, but if you don't have the industrial-grade liquid cooling to manage that intense heat or the power infrastructure to actually supply the juice, those chips are completely useless. Vertiv is essentially the plumbing and the electrical grid of the modern AI factory. Moving right along, Section 2, Qualitative Factors and Trends. The qualitative story here is absolutely defined by major industry partnerships. Right now, Vertiv is collaborating directly with NVIDIA to develop 800-volt direct current platform designs. So why does that matter to us? Well, traditional 54-volt racks just cannot handle the megawatt-scale power demands of next-gen accelerated computing. Vertiv is literally building the foundation for synchronous AI factories. We're also seeing this play out in the wild with the Echo Data Center project over in Sweden, where Vertiv is delivering the full physical AI infrastructure for NVIDIA's cutting-edge Vera Rubin GPUs. And to keep pace with all this crazy demand, they're actively out there acquiring companies, like ThermoKey for better heat rejection and BMarco to boost their manufacturing capacity. The sheer urgency of this build-out is perfectly captured by their CEO, Giordano Albertazzi. He said, as infrastructure density increases and deployment timelines compress, we're positioned to be the partner customers need to bring their most ambitious projects to life at scale. That phrase right there, deployment timelines compress, is absolutely key. Customers are in a massive rush to stand up these AI data centers, and they desperately need a partner who can deliver the whole shebang, from thermal management to power, immediately. And then Executive Chairman Dave Coate added a really interesting point. He stated, "This quarter demonstrates that Vertiv has built the kind of competitive position that compounds over time." Now, while the sources we're looking at today don't explicitly name-drop all of Vertiv's direct competitors, the leadership team is clearly super confident. They really believe their specific mix of tech and their ability to deliver at massive scale is actively gobbling up market share and building a really deep compounding moat. All right, let's dive into Section 3, Fundamental Financial Analysis. Let's pop open the hood and look at the financials because this builds a pretty compelling picture. Simply put, Vertiv's first quarter of 2026 was an absolute blowout. Net sales hit $2.65 billion, which is a solid 30% jump year over year. But you really got to look at the profitability line here. Adjusted operating profit skyrocketed 64% to $551 million. What we're seeing is textbook operational leverage. Because they're pushing way more volume through their systems while managing their pricing effectively, their adjusted operating margin expanded by a massive 430 basis points to hit 20.8%.
And for the cash flow watchers out there, adjusted free cash flow came in at $653 million, up an incredible 147%.
But let's go back to that 30% net sales growth figure for a second. This isn't just some flash in the pan. It's backed by a massive backlog of orders and really high order conversion rates as these AI factories come online globally. And looking ahead, management's guidance for full-year organic sales growth is projected at an equally robust 29% to 31%. So the core demand signal driving this whole business, it remains incredibly strong. Now, if we slice this geographically, it reveals a pretty interesting split. The Americas region absolutely exploded. We're talking 44% organic growth, heavily driven by intense data center demand. Asia-Pacific posted a really solid 12% gain. But then there's EMEA, Europe, the Middle East, and Africa, which actually saw a 29% organic decline. Now, according to the company, this drop in EMEA was largely just related to the timing of some specific projects, rather than a fundamental drop in actual demand. But it's definitely a metric we need to keep a close eye on in upcoming quarters. Let's check out the balance sheet because Vertiv is operating from a position of serious financial strength right now. At the end of Q1 2026, their net leverage was an incredibly low 0.2 times. They recently scored investment-grade ratings for both Moody's and S&P, knocked out a $2.1 billion note issuance, and retired some of their older debt. Add it all up, and they're sitting on a very comfortable $5.0 billion in liquidity. That gives them maximum flexibility to expand their manufacturing capacity or even hunt for more M&A. Moving right along to Section 4, Valuation and Scenarios. Okay, I want to be super clear right up front. Our source documents today, their earnings release and fact sheets, don't actually give us specific valuation multiples like a PE ratio, and they don't offer stock price targets. So we're going to look at this totally neutrally, just based on the documented operational facts. The bull case leans heavily on that huge 44% growth in the Americas, the deep collaborative moat they're building with NVIDIA for those 800-volt systems, and that massive $13.5 to $14 billion full-year sales guidance. On the flip side, the bear case would focus on making sure the 29% EMEA decline really is just a timing hiccup. Bears are also going to be watching their rising capital expenditures as they build out capacity and monitoring the margin pressure caused by international tariffs. And that brings us to Section 5, Key Investment Risks. No explainer is complete without looking at the downside. These are the structural headwinds Vertiv faces, straight from their SEC filings. First up, and probably the biggest, global trade conflicts and tariffs, specifically the recent changes under Sections 122 and 232. Vertiv has to actively play defense here to protect their margins from these import taxes. Also, their business involves very long sales cycles, which leaves them vulnerable to unexpected order cancellations. There's also the danger of long-term fixed-price contracts in the inflationary environment. If their supply costs suddenly spike, their profit on those older contracts just evaporates. And lastly, consolidation among their massive customers could mean Vertiv loses some leverage at the negotiating table. All right, let's bring it all home with Section 6, Final Investor Checklist. So, what's the big takeaway here? Step 1 on your checklist. Continue evaluating the macro demand for the physical layer of AI. Specifically, keep a close eye on liquid cooling and megawatt power. Step 2, watch Vertiv's margins. They are targeting a 23.3% operating margin for the full year 2026. The big question is, can they actually hit that despite the tariff headwinds?
Exactly. And step 3, keep tracking their global capacity. Are those acquisitions of Thermo King and BMarco actually yielding the manufacturing capacity they need to keep up with NVIDIA's crazy chip rollouts?
And finally, step 4, remember that today's explainer gave us a great look at the operational fundamentals, but to complete your analysis, you're going to need to hunt down those current valuation multiples and competitor data that just weren't included in today's sources. So as you watch this whole AI race unfold, ask yourself, are you just chasing the gold, or are you looking at the picks and shovels required to actually mine it? Just a quick reminder, this explainer is for educational and informational purposes only. It's not financial advice and definitely not a recommendation to buy or sell any security. Thanks so much for hanging out with us for this deep dive, powered by Lumora OS.